So, Roger Federer retires from professional tennis. Sad day for the sport, but maybe a good day to start and talk about his investments, more specifically the investment in the shoe company, one of the fastest growing shoe company in the world, On. ON, that is. Roger Federer invested around $300 million, worth 3% of the company, in 2019. With Federer quitting tennis, professional tennis that is, because he's still going to play at the Laver Cup and he's probably going to play some, exhibition matches throughout his retired career. So you will still see him wearing those shoes, but it doesn't stop there. There's still more details and more things I want to talk about in this video. And as the thumbnail says, could this be the next Air Jordan in the making? Maybe, maybe not. That will be discussed in this video. But before we go into that, if you want to support this channel and myself, do check out the link down in the description and in the pinned comment to get the top 10 best stocks to buy now, or go to fool.com/couchinvestor and make sure to check out all the other links in the pinned comment. So first of all, On shoes aren't really tennis shoes. Well, it didn't start as tennis shoes. It started as a running shoe company. It was founded by someone who was very, very good at Ironman, not Ironman Tony Stark, Ironman, the race, running, swimming, cycling. But then, obviously, since Roger Federer got involved, by the way, he got involved just by wearing the shoes before he even invested in the company. And then, obviously, since he invested in the company, more shoes were made by Roger Federer. Well, not by him specifically, but he had some involvement in the process. Now, if you're familiar with tennis, you know that there are some grass courts, clay courts, hard courts, and obviously carpet as well. But grass, clay, and hard courts are the most popular ones, which means you have some possibilities to make, already 3 kinds of tennis shoes. And it's not just tennis shoes, as we've seen with Adidas and Stan Smith. You can just make shoes that people wear casually. That's also something that the company has been going into, as you can see here on the screen. Various models, and the most recent ones really look a bit similar to Air Jordans. And that's maybe what got me to make this video. And so again, could this be the next Air Jordan? If you have an answer, obviously leave it down in the comments below. But with Roger retiring from professional tennis, you will obviously see him less with those On shoes on court. But that does not mean you won't see him being a great ambassador for the brand, for the company he personally invested in. Now, obviously, he can wear it during the day if you want to go on a run, post it on social media during his exhibition matches. But they could also go after other tennis players and offer them, obviously, partnership, sponsorship deals, just as Asics does, Nike, Adidas, etc., etc. You might see more and more tennis players wear On shoes. That just gets them more exposure, more amateur tennis fans might think, maybe I won't be buying Nike tennis shoes. Maybe I'll be buying On tennis shoes. Why not? You don't really need to be a Roger Federer fan. You can maybe be, I don't know, if let's say Shapovalov, or I don't think Alcaraz will go with On, but some other player out there decides to wear On shoes. Suddenly, maybe those fans will say, I want to wear those shoes as well, and they go buy them. Now, the shoes aren't cheap, right? It's, I think, $150, $200, something like that, maybe sometimes even more. So it's not cheap yet. Now, the company financially, their goal is 60% gross profit. Right now, it sits at around, I think, 56% gross profit. We're going to have a look at the financials in just a bit. It's been profitable for a while. Some quarters are unprofitable, but overall, the company is profitable. It's going to be more profitable in the future, especially right now. They're investing a lot in their business. Obviously, with inflation, with higher freight costs, etc., the company takes a hit as well. And so, by the way, this is a Swiss company, so these are Swiss francs and not dollars. So net sales increased 66% year over year. Gross profit increased 51.2%. Gross profit margin decreased to 55.1% from 60.7%. You're going to see a great overview in just a second. I just want to go over the major points from the last earnings report. Net income increased to 49.1 million Swiss francs from 14.2. Net income margin increased to 16.9% from 8.9%. And then all the rest here, basic EPS Class A increased by 11 cents. Diluted earnings per share increased by 10 cents. EBITDA increased 14.7%, but adjusted EBITDA margin decreased from 15.7% to 10.8%. Now I'll skip everything else here. I'll just show you a major overview and see how things are looking for the company financially. So this is quarter by quarter. On the right is the more recent one. On the left, this is Q1 fiscal year 2020. So as you can see, total revenue has been increasing quite nicely each and every quarter. Same with gross profit. Gross profit margin has been, let's say, stable overall throughout all these quarters. Now, when it comes to CapEx as a percentage of revenue, that has increased as well. So obviously they invest a lot in the business grows. Now, total stock-based compensation, you can see here in Q4, this is also where you will see the biggest hit. Obviously, since they went IPO'd, well, in that quarter, they took a hit. So stock-based compensation here jumped tremendously. Now, the quarter after that, that went down. This is also why you see here in profitability, EBIT, EBITDA, free cash flow. Well, free cash flow was positive. It's not positive anymore, but net income was negative during that quarter. Right now, net income is positive. So all is good on that front. Obviously, it could be better and will probably be better in the future. Now, right now, when we look at return on equity as a percentage, we sit just over 21%. So that's good. Return on assets just under 5%. And return on total capital, we're sitting at 6% or so. Now, when it comes to valuations, obviously, it's not the cheapest out there. Yes, they're still growing. And again, like I said, it's one of the fastest growing shoe companies in the world. Has obviously a great ambassador and also investors. So it could continue to grow and grow tremendously in different sports. So yes, obviously it was way more expensive before. It's down, well, total year return, it's down 51.8%. So obviously, well, valuation-wise, those metrics have come down tremendously as well. Could come down even more, depending on how the market continues to act in the coming quarters. And so to conclude and trying to answer the question again, could this be the next Air Jordan? Because if the answer is yes, then this could be a tremendous investment. I mean, tennis is a very, very popular sport. It's a growing sport as well. With him retiring, obviously, there are lots of eyes on the brand, on him. I think even when he will be retired completely, you will still see him push these shoes. You will see them, the company, go after other tennis players and make them wear the shoes as well. So in my opinion, yes, this could be the next Air Jordan. Maybe, obviously, tennis shoes aren't as popular as basketball shoes. But then again, things can change, right? And with a great ambassador like Roger Federer, things can change pretty fast. Obviously, do share your thoughts down in the comments below. Are you an investor? Are you wearing the shoes? Let me know down in the comments below. And if you enjoy this type of videos, leave it a thumbs up. If you haven't subscribed to this channel, maybe hit that subscribe button. And I'll see you all in the next one. Bye-bye.